All right, let's take a look at what's going on an equity front locally. James Gerrish joining us from Shaw and Partners and Market Matters. James, good to see you there. Have you had a look at that update there from BHP?
Yeah, morning to you, Andrew. I haven't had a chance to look at BHP's numbers yet, just a couple of the top lines, and they've, as you may mention, they're maintaining their full year guidance. They talked to similar trends that Rio spoke to yesterday when they reported their numbers. Obviously, demand for their products are going to be variable given, the global uncertainty and backdrop for economic growth and the like. So, on first read through, I didn't see anything that was, earth-shatteringly new out of that BHP result today, but I haven't been through it in detail.
Nonetheless, what's your view on BHP?
Yeah, I think in the short term, I think the commodity trade is a little bit more muted. So we're big advocates of the commodity trade over the medium term, but I think in the short term, as these as growing fears around recession come to pass. So I like BHP in the medium term. In the short term, I think the outlook for things like their main drivers of earnings. I think iron ore is probably a little bit muted. I think the copper price is sort of in no man's land, trading sort of $3.50 a pound. It's sort of got a range between 3 and 4 a pound. It's more muted would be my response to that, Andrew, at the moment.
All right. Elsewhere, Hub24 out yesterday, impressed, obviously, to the point it's impressed you. In fact, you own it. So where are you seeing it go? And I guess more broadly, how it's standing with its competitors at this point?
Yeah, I think it's actually a good point to pick up on Hub versus BHP. So I was a little bit more, we own BHP in portfolios and we also own Hub24. If I'm, making a bet for the back end of the year of what's going to be higher and what's going to rally more aggressively, my money would be in terms of Hub and the broader technology space. It's obviously been beaten down a long way over the past 12 months. So there's not a lot of optimism built into this, the outlooks here. But yesterday they delivered a quarterly update that was incredibly strong. Their funds under administration growth was sector leading for the quarter. They traded about a 10% discount to their peer net wealth. We've upgraded our numbers on the back of yesterday's result. We've got a buy 36.85 price target's up about $1 from where our price target was. We've been optimistic on it for a while, but you look at the momentum in the business is really strong, and I think Hub's 14% gain yesterday was warranted.
All right. James, more broadly, the Bank of America Investor Survey is out. What are your observations?
Yeah, I was just listening to your prior guest talk about the optimism that's flowing through in the market. And I think, the results from that Bank of America Merrill Lynch survey would say otherwise. So, cash levels are at 6.3%, which is a 20-year high. 49% of fund managers surveyed are underweight equities. 83% of them think global earnings over the next 12 months are going to be lower. So, I would say that's bearish positioning. And markets are all about expectations and positioning around those expectations. And my argument has been for the last couple of weeks has been that the market is positioned on the negative side. We all know earnings are going to be low. We all know the concerns that are out there from an economic standpoint and the talk of recession and the like. But our positioning is already reflective of that. The market's there. So, in my mind, we're probably going to get, the signs that bond yields are peaking. I think some of these more, yield sensitive areas of the market, interest rate sensitive areas of the market, are bottoming. And I think the market's in my view, the market's more bullish into the back end of the year, given the bearish positioning that we've seen in that survey, Andrew.
About you saying perhaps the Australian market, how is that placed with it compared with its global peers?
Well, we haven't fallen as, we're still a fair way off our recent lows. The US market came back this week and tested their recent lows and has bounced from them. So we've done better. Obviously, the composition of our market more skewed towards banks have been a positive for that. We obviously had Bank of Queensland deliver a good result, and we're starting to see analysts revise up revise up that sector based on the outlook for margin expansion. So if Bank of Queensland can grow margins, they typically struggle to grow margins. The big four can grow them more. So that's the bullish thesis on the banks. We've of course had Wall Street banks report this week. Goldman's out overnight. Better than feared numbers, but they're always better than feared. They always under promise, over deliver in terms of US earnings generally. But one thing I'd highlight is the fact that they're all adding headcount. So you generally don't add headcount when you've got these huge concerns about a deep and protracted recession that's around the corner. So, there's a lot of rhetoric coming out around what banks are doing, etc. But look at the actions rather than their words would be my advice there, Andrew.